Time what happened? We purchase goods on credit because uh, there are some cases that we don't have money or we have a very good relationship with the other business partners, and on credit basis we purchase some goods for selling purpose and we make a payment later on. And there is not a necessity that in business that we will see and observe only the cash transactions. So credit transactions is also involved. So for the cash transactions that we know, so whenever we are going to buy something, we know purchase account debit to cash. And for selling, cash account debit to sale. These are the normal journal entries. The normal journal entry that I'm going to write it on the right hand side, just for your understanding. If there is a cash purchase, then what we write. So what we do. So normally in cash purchase, what we write, purchase account debit, purchase account debit to cash. This is the normal entry by default. But in case of cash sale, so when there will be cash sale, we are going to give some product. The products are going, goods are going from the business. Then we can, but what is coming? The cash is coming. So cash account debit to sale. All right. Why this is the debit and why this is credit? I just would like to explain you before making you understand about the credit transactions. Here in this case, let's say $1,000 that is the amount of the goods that we have bought, and for selling like a $1,200 some of the goods that we have sold. In first case, we know that we have debit side and credit side same, and purchase is what? Purchase is that I'm considering here as an expenditure. I'm considering this is as expenditure, and cash is real. Cash is real. And sales is as income. Expenses that we know. Paid all expenses and losses, and credit what goes out, cash is going. Debit what comes in, cash is coming, balance is increasing. Credit all income and gain. This is the normal journal entries that we do, and normally that we have done this entry in our project. So now I'm just would like to explain the credit sale and credit purchase. Whenever there is a name of the person involved, in case of a credit transaction, instead of cash or bank, we write name of the person. That's it. This is the only difference. But I'm going to explain with one example here. Let's say transaction number 1, goods purchased from, let's say, Costco, $2,000 on credit. So in this case, we received goods. The value of that goods value means purchase has increased. So definitely account debit. We are considering this as expenditure of this year. So expenditure of this year should be considered and this year. So this is because of the matching concept. Expenditure of this year should be recorded this year. 2. Now, in this case, what we should write? Normally, we write cash in case of cash transaction, but now this is not cash transaction. We have not paid anything to Costco. If we have not paid cash or neither cash nor bank balance has gone down. So what we should write? So we know according to the any transaction we have two elements. The one element is purchase and second element will be name of the company.
Oh, Costco.
That will be Costco. So we know the Costco is what? In this case that we are buying from Costco and definitely we will pay to Costco later on, maybe 1 month, maybe 15 days, $1,000. So that will be our accounts payable, or also known as sundry creditors. I've just written in bracket accounts payable. The reason being that to make myself aware about like these are our accounts payable, right? And definitely if like $1,000 I'm writing here, purchase is expenditure and definitely that is increasing. If expenditure are increasing, this is debit. On the other side, account payable is our liability because this is liability. This is now become our responsibility. This has become our liability. After some time, we need to pay this money to Costco company. If this is a liability, definitely it will come on the liability side under current liabilities. Very simple. This is all about the credit transaction. This is about the purchase and I'm going to make one more entry that is related to sale, credit sale. Sorry. Here I'm going to write second journal entry. Second journal entry is saying about goods are sold to maybe our other customer Messrs. And company. This is one small company or big company, but we have sold goods to Messrs. Sohan and company on credit. It means we have not received anything, but other side, if there is a purchase, we write purchase always, whether this is a credit purchase or cash purchase. If there is a sale, whether this is credit sale or cash purchase, we will write sale. Sale always we will write credit and purchase always we write debit, because sale is income and we always write income and credit. Purchase is expenditure, we know always write on the debit side and both are nominal. Sale that I'm going to write it here one amount, let's say $1,200, maybe $1,400. So I'm going to write $1,400 here and $1,400 here. So for this, here I have not received the money. It means I cannot write cash. I cannot write bank. I have not received cash. So what should I write? I should write name of the party, name of the company, name of the person. So here I have sold goods to Messrs. Sohan and company. So I will be writing here Messrs. Sohan and company. In bracket, I'm just going to write for my understanding. So this is our accounts receivable. So this is the general entry that we have done. Next, what happened? As per the end transaction number 1, we bought goods from Costco And now this is the time after like maybe 15 days. Out of $1,000, I have paid like 550. So 550 I have paid. This is the transaction. So first of all, I'm going to write payment is made $550 to refer transaction number 1. In this case, we have made payment. Payment is made by cash. So cash balance has gone down. So definitely the cash has gone. We will write cash here, 550. In this case, what we will write on the debit side. This is the main that we will get confused. But there is no question of any confusion. Here, if we say the Costco is a personal account, and we know the rule of personal account, right? In this case, credit the giver, right? And this is also here. I'm going to write who will receive this money. Costco is going to receive this money, and I will be writing here Costco. Right? So Costco $550 has received from us. So we know this is a personal account. And we know the rule of personal, debit the receiver. And in this case, the same case, like I'm going to write here personal was credit the giver. So this is the one transaction that we have done. Cash, we know this is real. Then credit what goes out. Purchase, we know this is we have considered this is as a nominal. Debit all expenses and income. This is we have done. OK. Now, fourth journal entry. I'm just going to write on the basis of reference number 2, transaction number 2. Some of the goods that we sold to Messrs. Sohan and we received some money. When we receive money, and definitely cash account debit. But here first I'm going to write received. Received $400 from 400. If I'm writing bank means by check from Sohan and company. Refer transaction number 2. So it is very much clear that we have received a check. It means bank. We at the company have received a check from Messrs. Sohan and company. It means our bank balance has gone up, will be debited with the amount. And we know bank is personal account. And in case debit the receiver. And the second element will be in this transaction. Who has given this money? Mr. Sohan. So $400 is received from Sohan and company. This is also personal. Who has given this money to us? Sohan is a personal account. Credit the giver. Right? Okay, so in this case, what happened? I have explained these 4 general entries for sale and purchase. One will be account payable and other will be account receivable. Now, in this case, if Mr. Sohan and company is account receivable, then definitely that will be comes under asset side of the balance sheet under the heading current assets. Why current assets? Because in 12 months of period, less than 1 year, the cash can be converted into that amount can be converted into account receivable can be converted into liquid, means cash. That's why this is known as account receivable. So this is all about the credit transactions that we do in accounting.